Good morning from our global headquarters in New York. I'm Menace Crenny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
Alphabet crushes the street's estimates, boosted by cloud. The NASDAQ 100 hits a record high. The next round of Mag 7, Microsoft and Meta report after the bell with AI and CapEx in focus. And we're live from Riyadh at the FII. Our interview with Hong Kong Exchange's CEO Bonnie Chan coming up. Good morning, Manus.
Danny, good morning. Records abound on the NASDAQ, an all-time high traded through last night. The bid and the offer. The bid is Alphabet blasting through on their cloud business, but some of the Chinese advertisers scaling back. We'll talk about that in a moment. You've got consumer confidence up the most since March 2021. On the offer side, of course, it's AMD. More on that in a little bit. Lisa Shallett just takes them back 24 hours. These are expensive and ambitious earnings season. Can they really grow into 2025? Roll it over, have a look at the bonds. If you want to understand it, pause for breath. I think it's manifest in the bond market, Danny. 428, 430 yesterday is where we were on those 10s. Real money, did they come in? Did they pick up a hedge ahead of the election? But the velocity, the upward velocity in yields has paused for the moment. This 7-year auction went fine. It was a record bid to cover ratio on the 7-year auction, which was sort of mind-blowing given that you had to cheapen up the 2s and 5s.
Yeah, so we're buying bonds at the auction again. The S&P is within 1% of an all-time high. The NASDAQ's at a one-time high. Confidence is good. You get this feeling that things are really sunny right now, which is odd given the amount of event risk we're having over the next week.
Yeah, I mean, we go into this concertina of risk. It's the jobs on Friday, the election, and then the FOMC. There's a building consensus that the Fed will see through all the noise in the jobs numbers and go with the 25 basis points. I think maybe the tail risk is, you know, we're so focused on a red sweep and a Trump presidency. What's the tail risk?
Yeah, you're certainly seeing more of that come through. Is it a buy the rumor, sell the news, or are we just unprepared for just how tight this race is?
Indeed. It is a big week for Mag 7. That's what we focused in on. Alphabet, as we say, the investments there in AI beginning to pay off, helping deliver better than expected on the quarter. Joining us now is our executive editor for Global Tech, Peter Allspring. Peter, when you look at these numbers, the CapEx number is what the market is most focused on. Again, music to NVIDIA's ears. CapEx up 62%. But how did the business actually do?
Well, Alphabet had to play a little bit of catch-up in AI after OpenAI came out with ChatGPT. It kind of jumped out to a lead, despite the fact that Alphabet and Google had been investing billions of dollars over the years. They had developed a lot of these services in the past, but they'd been a little bit reluctant about bringing them into the market. And now what we're really seeing is that their AI services are gaining some traction. Revenue overall was up about 16% to $75 billion, but the cloud computing business was up 35%. So you're really seeing customers coming to Google to get some of those AI services to be able to build on that. So as a result, Alphabet is beginning to close this gap with Amazon and Microsoft in cloud computing. That's really benefiting their business overall. As you say, they're pouring a ton of money into CapEx right now. That benefits NVIDIA and others down the supply chain.
They're investing a lot in CapEx. These executives at the hyperscalers have said we'd rather spend too much than too little. Then why, Peter, do we get results from someone like AMD, whose AI chip demand isn't as robust as analysts had expected?
Yeah, so AMD is trying to play catch up to NVIDIA, which is really dominating this market at this point. As we've seen, they've come out with the AI chips that everybody really wants to buy. They've also got a very close partner in TSMC that's been able to make more of those chips for them. AMD's results actually in the third quarter were not bad, but it was really the forecast into the fourth quarter that was a little bit light, and investors were a little bit disappointed by how much traction they're getting in the AI chips in particular. They compete in a number of different areas well beyond what NVIDIA does. And it was really in that AI accelerators where they're gaining some ground. They are becoming the strongest competitor really to NVIDIA at this point. But NVIDIA has such a lock on this market that AMD has a lot of ground to make up here. And so far, it's not closing that gap as quickly as investors had hoped and had anticipated.
And sadly for investors, they're going to have to wait basically a month to get NVIDIA earnings. Peter, thank you so much. Wonderful to see you in London. Please come join us more regularly. Bloomberg Executive Editor for Global Tech, Peter Allspring. So stocks are feeling good thanks to tech earnings near an all-time high. Credit spreads are as tight as they've ever been. But then there is this. The MOVE index of bond U.S. Treasury volatility is at its highest since October of 2023. That's certainly telling us something different. Joining us now is Henrietta Pacquement, head of fixed income at Allspring. Henrietta, the founder of this index said that we are preparing for a level of crisis at a time of no crisis. What do you make of the volatility that this bond market is currently pricing in?
It's been quite a move over the last month. But I think two things to highlight there. We'd had quite an aggressive rally over the summer. So I think you have to take that into account when looking at these moves. And then you've really had two drivers. I think you've had a resurgence of the Trump trade that's been expressed in the bond markets. But actually, it's come with better economic data out of the US, right? And maybe less of a need for the Fed to cut. And I think we're seeing a reflection of that too in the moves that we've seen.
So the velocity in the bond market has been driven, let's say, by the macro data, Henrietta. How much more virulent can this become? If I look at the deficit numbers from Harris over the next 10 years to 2035, it's 3.95 trillion. Under Trump, the estimate is 7.75 trillion. Of course, you've got to see the complexion of Congress to understand the size of the deficit. But that is the next potential leg of pricing to come. And is that in any way reflected in this move so far?
So I think it is part of the move. One of the stances has been is that both candidates on the US side are likely to spend, and it's actually not just a US phenomenon. If you look globally, deficits are an issue in a number of developed economies. So I think that does make the sort of longer end of the curve more vulnerable and more likely to see volatility. So I think one thing we have seen, though, in the last few weeks is maybe more uncertainty coming in if we have a Trump administration than if we have a Harris administration, and hence some of the volatility that we've seen.
Henrietta, one of the more brilliant things I've seen written on this comes from Mark McCormick of TD, who basically said that if we have a Harris presidency, it is inflation, it is growth, it is the economic data that's driving the market. If it is a Trump presidency, he will reset this market towards politics. Do you think that's a fair lens to view the differences between the two?
I think it's a decent lens. The other way to look at it is expect more volatility if you have a Trump presidency. We saw that last time. I think we're likely to see that again. Maybe a little more turbocharged because he's already been in an administration once, so he knows the ropes a little better than the first time around.
Well, in the first 2 weeks of his administration in 2016, bond markets rose by, 60 basis points, and we've already pretty much done that. Does the Fed look through what's referred to as a dirty jobs number? Does the Fed look through politics? Do you still presume that they go forward with the two 25 basis point rate cuts before the end of the year?
So I think they're on course for the next cut at this point, given how close it is to the election. I think that the next one is a little further away. They might have a bit more time to see economic data and the political climate at that point as well. So, on course for the next one. We'll see for the one after that.
So, Henrietta, while there's nerves in the Treasury market, that's not the message coming from equities or credit. Spreads have whitened ever so slightly recently, but this year it's been a story of grinding tighter. Something like 150 basis points for high-yield spreads have moved in this year. Demand is strong. Issuance is strong. Is this a train that just cannot be stopped?
Well, there's a lot of interest in the fixed income markets, and I think that's reflected in the technicals that we're seeing, and as a result, what we're seeing in the spread markets. In terms of level, yes, they're pricing in maybe more of a mid-cycle environment at this point, and certainly a benign economic environment. I think also they're supported by the overall yield levels that are available. Something that investors haven't seen, pre the COVID period. So I think that's an attraction, and that's certainly helping on the technical side, even in credit.
Okay, well, it's going to be a frenetic 10 days. Henrietta Pacquement of Allspring setting this stage. Other stories trending on your Bloomberg terminal this morning. This is what we got for you. UBS reporting their third quarter results, broadly beating expectations, while warning of headwinds ranging from the US elections to falling interest income. The CEO, Sergio Motti, spoke to Bloomberg about the risks around the election.
The markets are pricing rather a Trump victory. If Kamala Harris wins, of course, some of the trades that are ongoing for Trump will probably have to be reconsidered, and therefore they're going to create rotations in the market.
Volkswagen operating margin shrank to the lowest since the pandemic, forcing the car maker to idle production and shutter showrooms. VW is also looking to reduce wages for around 140,000 workers by 10%. That will add to already a weak German economy.
Standard Chartered has vowed to return at least $8 billion to investors by 2026 after better than expected earnings. It's also doubling its investment in wealth management to invest about $1.5 billion over the next 5 years in relationship managers and investment advisors.
Coming up, we're going to bring you our live interview with the Hong Kong Exchange CEO, Bonnie Chan. She will be sitting down with Jomana from the Future Investment Initiative Conference in Riyadh next.
And less than a week away from the U.S. election, State Street's Marvin Loh says a Republican sweep would be pro-equity. More on the details with Marvin later this hour. Context Matters on Bloomberg. Bloomberg Brief. I'm Manny Screen alongside Danny Berger here in New York. The leaders of finance and industry are gathering in Saudi Arabia this week for the Future Investment Initiative Conference. Let's bring in Bloomberg's Jomana Basetchi. She's in Riyadh with a special guest. Jomana.
Hi, Manas. Yeah, right. That is right. I do have a special guest with me. I've got the CEO of the Hong Kong Stock Exchange, Bonnie Chan, sitting with me. Wonderful to have you here. Also, on a day of a big announcement coming through from HKEX, and you said this morning that you're going to be opening up your first office in Riyadh in 2025, just really reaffirming the financial ties between Hong Kong and Saudi Arabia.
That's right. Thank you so much for having me, Jomana. And we're very excited. So this morning we announced that we are going to open an office here in Riyadh. I think this is another step in furtherance of our overall strategy in the Middle Eastern region. And we have been having dialogues with our friends here for quite some time now. Of course, it started a couple of years ago. We have signed an MOU with the Tata World Group. We've also recognized a few exchanges in the region, including Tata World, Abu Dhabi, as well as Dubai financial markets, so that it will be easier for companies in this region to potentially explore a secondary listing in Hong Kong. But I will say that the kind of cooperation we have and the level of interest we've seen is just amazing.
Let me just pick up on one thing you said there vis-a-vis the secondary listing in Hong Kong. There've been reports that you've been in talks with Aramco about a potential secondary listing. Could you give us any color there?
Well, I'm not in a position to comment on any specific company, but suffice to say, we have been trying to foster a lot of dialogues between corporates on the one side and investors on the other side in both regions. So, for example, we hosted a few events. Today we're here at FII. Last year, FII Priority actually was hosted by us at the Connect Hall in Hong Kong. And then following that, we also have the CMF in May. And every time we have those events, there will be bilateral meetings on the side, aside from the main stage events. And like I said, there have been so many conversations between those two pockets, investors on one side, corporates on the other side. And so hopefully we will see some listings coming out of it.
Cross listings.
Yes.
Okay. Speaking of listings, I know there were 2 listings that are going on this week as well. ETFs are being launched on the Tadawul Index, tracking the Hong Kong Stock Exchange.
Right.
Last year, the reverse happened.
Yes.
Let me just ask you about these new listings and how much you expect that it's going to mobilize capital into Hong Kong stock markets.
I think these listings are very important. First of all, mobilizing the capital. But more importantly, I think they're important in terms of building the awareness and familiarity. Because at the end of the day, we're at the beginning of this journey, right? Yeah. So we need investors on both sides to gain more knowledge and familiarity with investment opportunities in the opposite direction. And therefore, last year in November, when we listed the first Saudi ETF on the Hong Kong Stock Exchange, that marks the beginning. And there were over 50 Saudi companies underlying that ETF, which were listed on the exchange. And this week, it's the reciprocation.
Exactly.
We have those two ETFs with Saudi underlying, with Hong Kong underlying, listed here on Tadawal. And I think that's another step, towards hopefully, a very fruitful collaboration.
What's liquidity been like and trading volumes on the ETF that was launched last year?
Yeah, I think it's been healthy, I would say. And more importantly, it like I said, right, it has raised that awareness. And I mentioned our MOU with Tadawal before. Cross-listing is just one aspect of it. We're also exploring collaboration in the area of fintech as well as ESG. So I hope that I'll be able to bring more exciting news besides cross-listing, into all those other areas.
Yeah, well, I look forward to that discussion as well. A quick question about also just the general activity that you're seeing on the exchange right now, because it feels as though there has been a small pickup in IPOs recently. I know the past month, September, has been a busy month in terms of volumes. Is that momentum going to continue?
Oh, yes, absolutely. We are very happy with the return of mega IPO, shall we say. We all know that the last 2 years have not been particularly conducive to the IPO activities, and this is a global phenomena. But in Hong Kong, we first of all did a very big IPO in September for Midea, and it's a $4.6 billion IPO, which is the biggest on our exchange since February 2021, and the second largest in the world this year. And following that, we have already seen another couple of pretty big deals. And the important thing is the participation has been quite phenomenal. We're seeing a lot of international investors coming into these deals.
So on that point, the recent policy address laid out an accelerated time frame for IPOs. Yeah. Are you concerned that there may be some sacrificing of quality just to bring these IPOs online?
Well, not at all. I think obviously we are, we firmly believe that one of the attraction, for companies, coming to Hong Kong to get listed is because, we are a quality exchange, right? And therefore, while we are accelerating or streamlining the process, it will not be done at the expense of quality. That's something that we will definitely be very mindful of.
Bonnie Chan, thank you so much for speaking with Bloomberg today. That was Bonnie Chan, the CEO of the Hong Kong Stock Exchange. Danny, I'll toss it back to you.
Jomana, thank you so much. Jomana Bersachi in Riyadh with the Hong Kong Exchange's CEO, Bonnie Chan. Okay, coming up, the Bronx Bombers make a comeback. Thank the Lord. How the Yankees denied the Dodgers a World Series sweep. Can they do it again? We'll have your front pages for you next. It's your Bloomberg Brief. Danny Berger and Manus Cranny in New York. Let's get you some front page news. Here's a look at what's making headlines around the world. First up on the Bloomberg, the EU is posing tariffs on China EVs. Tariffs are now up to 45%. The move now raises the risk of escalation in a trade confrontation.
Next up, the New York Times leads with Elon Musk seeing Trump's economic plans causing temporary hardship. Musk agreed there would be initial severe overreaction in the economy, but also said there would be a rapid recovery.
And next up on the Washington Post, the most important story of the day, Yankees shortstop Anthony Volpe denied the Dodgers a World Series sweep. He had a grand slam, which stopped the Dodgers from winning. The Yankees won 11-4, so they are 1-3 in the series. Man, it's the best part of the game. I have to show you the video. So Mookie Betts, right? He's famous Dodgers right fielder, goes to catch a ball. Literally, there are Yankees fans hold his arm down, open up his glove, and take the ball out, and they were ejected. And I saw that, and I was like, it's New York for you.
Could you imagine paying the $900 for the ticket and getting thrown out? As far as the viewers out there, I mean, there's a very famous, just sort of reading some of the stuff on this, Shohei Ohtani, he's the Japanese player. All traders in the banks in Japan have been banned from watching the entire series because of compliance reasons. So it's like really around 12% of Japan actually tune in to watch baseball. The facts we have on Bloomberg. he's a one-man band. He's generating something like $750 million of industry in his own right.
Yeah, I mean, he's a generational talent. There's no denying that. They also have another Japanese pitcher, too, so there's a lot of excitement around that. Yeah. So maybe unfortunate that they can't, trade around it and make bets as maybe that they wanted to in Japan. But, I mean, this World Series, it's been something, and it's been heartbreaking. And I really want the Yankees to come back. We had the producers here encouraging us to wear Yankees jackets, and I don't think I can do it yet.
I went and got you a Yankees jacket, and you said, no. I don't think we want to put that on yet.
I'm not confident enough.
Dodgers with 3 games under the hat, and they've only got 1.
Yeah, exactly. It's a knockout from here on out. It's elimination games, and I'm nervous, Manus, and they're on too late for me to watch, so it's really the conundrum.
They're on too late for both of us to watch
8 p.m. is way too late for a sports game. I think we can just say that.
Yeah, and it's been a heavy week of sport. What have we got coming up? I think we're going to talk a little bit more about elections rather than sport. It is a sport, isn't it?
It certainly is. We're going to catch up with Marvin Loh from State Street. That's to come on your brief. From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
Alphabet crushes the street's estimates, boosted by cloud. The Nasdaq 100 hits a record high. The next round of Mag 7, Microsoft and Meta report after the bell, AI and CapEx in focus. And campaign efforts heat up with less than a week to go until the U.S. election. Danny, good morning.
Well, everything is just wonderful, Manus. The S&P 500 is near a 1% all-time high. Bond yields, they're coming down this morning, helped by a better auction, turning around a volatile session. The MOVE Index, though, volatility still at its highest since October 2023. For equities, inching closer to an all-time high. The Nasdaq is at a record. Alphabet reporting solid sales and its earnings beat, strong cloud computing. Manus, you could be fooled that we're not about to have core PCE, payrolls, the election, and FOMC rate decision. You could be fooled that that's not on the horizon, just looking at what markets have done so far this week.
I mean, it's to the moon on that Nasdaq. The bid and the offer. The bid is Alphabet, the offer is AMD, and the dream team come together later on today. It is Microsoft along with Meta. What are they going to tell us about AI? And this goes back to what Lisa Shallett said yesterday when she was here on Surveillance, which is it's about the delivery. It's about an immaculate earnings expansion to come into 2025, not just what you deliver today or over the next couple of days.
Well, so far, just from the Mag 7, it has been large surprises to the upside and large market reactions to that. 5% for Alphabet, 20% for Tesla. For Reddit, 22% gains. It is a market that maybe took its eye off the ball given the election risk and is now getting excited and the animal spirits reawaking over earnings.
They do indeed. Well, the animal spirits are alive and well. We're 6 days and counting to the presidential election. State Street's Marvin Loh weighs in on the market implications, telling us this. There's a greater odds of a red sweep. That's pro-equity, risk-supportive view based on expectations of less regulation, positive growth impulse, at least in the short term. Is the intermediate term, however, that is far more nuanced. Marvin joins us now around the desk. The medium term. I mean, we can split this down. Look, the short term, the markets are really leaning hard into red and the Trump trade. The nuance, I am interested in the nuance. That is about immigration and tariffs, and that's about boomerang inflation, isn't it?
Yeah, for sure. So, we'll figure out. Ultimately, we'll figure out who wins, right? Let's start there. But there's always the conjecture. How is the immigration policy actually going to evolve? Mass deportations is not good for anybody. It certainly isn't good for the fabric of the economy, the fabric of society, but also there's an inflationary impulse associated with it, which we've never really seen. There's a lot of uncertainty, even as the market seems to be getting more comfortable with some of the certainty associated with what the betting markets are saying.
It is a market that, as you say, is moving with the betting markets, but the polls are still incredibly tight within a margin of error for so many of these swing states. If it is a Harris victory, what needs to reverse? What gets given back in this market?
I mean, I think yields probably are front and center. I think maybe some of the alternative asset classes like the crypto have run a significant amount. Gold is probably part of that to a certain degree. I would look for the biggest reactions around that. Yields in particular are super interesting. Number one, they're deep markets, so there's a lot of versus crypto, which can get moved around a little bit easier. There are some significant types of economic and future thought processes going into how the yield curve has traded over the last couple of months.
we were trying to decide what the right phrase is to use if there is a Harris victory. But let's assume there is a Harris presidency and a split Congress, which are split. That scenario for markets, would it shake these all-time highs that we're seeing in equity markets more than the bond market? Because both candidates are talking about deficits, $4 trillion under Harris through 2035, $7.75 trillion under Trump by 2035. So one is much bigger, but both are on a deficit trail.
Yes, for sure. So I do think that the knee-jerk reaction from a yields perspective is that we do get duration potentially outperforming a little bit more. Kind of the market's approach that it doesn't want to own any long bonds will probably reverse itself. That can theoretically support the equity market. So I think when we kind of look at the soft landing discussion, we haven't talked about that in the last couple of months because we all, or the last couple of weeks at least, because we're really focused on the election. But the soft landing narrative is still out there, and if you do get lower yields, it still does remain supportive of those risks, and the central banks are still cutting.
To that point, in company earnings, Bank of America had this wonderful research paper yesterday that said that mentions of bottom, just that phrase, have skyrocketed in company earnings report. Assuming that there's some sort of cyclical bottom happening and we're only up from here, how independent is corporate America right now from the politics and the ability to keep earnings growth going on?
I mean, I think it is very possible, and I think that's why there's potential legs to this rally across a number of different risk assets. There's a very disparate view in terms of how to approach corporate taxes, regulation that does come into play. There's going to be sectoral nuances that are associated with each administration. But if we still are talking a soft landing, if we still are talking about rate cuts in the range of 100 to 150 basis points around the world across all these central banks, that's got to be supported for risk assets.
Yeah, I mean, we're in this synchronized cutting cycle. It's just a question of who has to pause and who can accelerate. You do warn on the weaponization of deficits and that the bond vigilantes will have the last word on this. And the question is, going into 2025, regardless of who wins, are you expecting something akin to a Liz Truss moment here in the United States of America? Maybe not as virulent, but the vigilantes will have their day.
The vigilantes will have their day. The few that are left. I mean, it's been 30, 40 years since we've been wondering where the vigilantes are. Yeah, I mean, we've got so many things cooking within that debt sustainability discussion. Not only are we looking at a record amount of debt that needs to be issued, but really, U.S. exceptionalism, dollar homogeny. We live on the generosity of our neighbors, so we need to have a place on the world stage that makes the foreign investor want to buy our treasury bonds, and that has potentially wavered depending on how policies and where the U.S. kind of fits on the world stage evolves. So I do think that it's going to be the bond market that makes Washington take notice. The whole concept of the deficit has been weaponized. There's no discussion of actually trying to be in balance. So it's degrees of the deficit. And eventually that's going to come to roost in at least my way of thinking. And that's why we're seeing longer yields move up faster than kind of the shorter yield. It's kind of this term premium discussion, if you will.
Is record gold prices and record demand for gold also part of the same conversation?
Yeah, for sure. Again, there's so many things in the pot right now. There is absolutely that inflation discussion. There absolutely is the debt sustainability discussion. There's uncertainty around the world that kind of helps gold. A lot of these alternative currencies trade that way, if you will.
Marvin, this was so wonderful. Literally the perfect setup to the election. I'm going to watch this back, getting ready for Tuesday. Marvin, thank you so much. Marvin Loh of State Street. Let's get more on the elections now. Candidates Harris and Trump are bringing home their message to voters in the final stretch of campaigning.
America, we know what Donald Trump has in mind. More chaos, more division, and policies that help those at the very top and hurt everyone else. I offer a different path, and I ask for your vote.
The problem is, if we had more of these idiots running our country, you won't have a big and best market anymore, because we're a nation in decline. We're going to turn that around, so you're going to be so proud of this country.
Joining us now is Bloomberg's Derek Wallbank. Derek, great to see you this morning. Both Harris and Trump billing these addresses as closing arguments. So what kind of closing argument did we get from the candidates?
Well, in Harris's closing argument, you really saw a kind of contrast set. She was stated at the ellipse, right at the south side of the White House, right about where Donald Trump was on January 6th. And that was very intentional. She set up a contrast. She basically said, you don't want the chaos of this guy. You don't want all of the baggage that he brings. You want me. I'll go somewhere different. It was almost a bit of a return to normalcy speech, but more of a kind of how can we help solve your problems rather than sort of like that classic Democratic what can we build kind of thing. Donald Trump, it was very much more of the same. It was a combination of things aren't that good and they were better under me, as well as everything she says she's going to do better. She's been vice president. Why didn't she do it already?
Well, we're beginning to hear a few more names being floated in terms of who could take government with Trump. Treasury contender John Paulson, that's in the Journal this morning, could potentially join Elon Musk. And again, Musk talking about slashing spending in the Journal and the implication for markets there. So we're beginning to get a little bit more complexion about who might surround a Trump presidency.
Yeah, that's really true. And I think a lot of who surrounds a Trump presidency is going to be a key thing that both campaigns are probably going to drive at. In fact, you see this with Harris right now, her campaign trying to make issue of that rally at Madison Square Garden that Donald Trump had and comments that he made and really that some of the other people on stage made as well that were negative towards various different ethnic groups. At the same time, there were comments out late from Joe Biden, the president, comparing, depending on who you believe, the White House says it was about one supporter, the feed and Donald Trump are saying, no, that's actually Trump supporters broadly, so there's some question there. That's stepping on a lot of Harris's rhetoric. But you do see, I think to your point, Menace, you're going to see Trump start talking. He's a little bit risk averse. He doesn't like to put the cart ahead of the horse on this stuff. But you are going to see some discussion about who could come with him. Musk is that biggest name, as you mentioned, for a potential how do we cut the deficit kind of thing, how do we reduce government spending might be the real way to look at that. But it is going to be really in focus. I mean, I think the Treasury is a big thing. I think what he wants to do with the Fed is a big thing. And Donald Trump is not somebody who has a history. Even if he puts very serious people in some of these financial positions, as he did in his first administration, he's not someone who tends to sit on the sideline and say, oh, well, I'm just not going to have an opinion because that guy with a big resume likes to do things. He's been very clear about what he thinks the Fed ought to do, as well as the idea that he thinks that he ought to have more say over, over what the Fed may or may not do.
Okay, Derek, let's see, as you say, we're counting down to this. And if you put Paulson and Elon Musk together, you're looking at potentially a lot of spending cuts that this market might not have spent a lot of time thinking about. Derek, thank you very much. Derek Wallbank on the very latest on the campaign trail. Coming up with Danny and I, the bets on AI, they're paying off. Well, for Alphabet, they are. Extending their post-earnings gains. More on the story next on Bloomberg. It's Bloomberg Brief. I'm Manus Graney alongside Danny Berger here in New York. It's a huge week for earnings, and big tech is the big focus, along with big pharma. Mandeep Singh and Sam Fazeli join us for a discussion from Bloomberg Intelligence on these earnings. Let's kick it off with you, Mandeep. On Google, getting a boost pre-market trading. It looks like they've done really, really well in terms of the cloud revenue up 35%. But what else stands out for you? Because there is some question around the YouTube. So if we balance it out, you've got cloud, you've got search. Apart from that, what stands out for you?
I mean, on every line, it was a very solid quarter. And when it comes to YouTube, YouTube subscriptions actually grew 28%. I know people focus on the ad side because, that's a separate line and it's 12%. Very impressive growth rate, but YouTube subscriptions Compare that to Netflix, growing at mid-teens. That just goes to show how well YouTube is doing. And then core search. I mean, that is still the profit driver. And what they told us is AI overviews is lengthening the duration and the engagement of the search. So that's translating into real ad dollars. And that's generative AI at scale. And what else can you ask for?
And you pointed out that a quarter of code being written at Google, of new code, is AI, which is just a wild figure to think about. I mean, Mandeep, we're in this point where everyone's plowing money into AI. They're using it more. And it feels like the competition's getting really intense. I know Microsoft accused Google last week of shadow campaigns and funding lobby groups to undermine their position with regulators. Just how intense is this competition?
I mean, there's no doubt that, code completion is one of the big use cases of generative AI, and Google doing it at scale means that you're not going to see the big headcount increases we saw back in 2021 with these big tech companies. They are operating very efficiently. Even on the CapEx front, they didn't have any surprises. It was in line with expectations. So you can see operating leverage in this business and, the company, the way it's operating. If the search business continues to execute, you saw a significant margin expansion last night, and I think that will likely continue here.
Well, the CapEx numbers are music to NVIDIA's ears of what, 13 billion, and certainly a bit. The question is then, does Alphabet encroach and close the gap with Amazon and Microsoft? Because that's one of the debates that we've had for the past couple of quarters. They were lagging on a number of fronts. Do you think that that gap is closing?
Yeah, it was a very nice acceleration from 29% growth in 2Q to 35%. And, for a run rate business of around 44 billion, that's where cloud is at. I mean, they were always a distant three with Amazon at 105 billion and Microsoft at 80 billion. They are growing much faster. Right. And that's primarily driven by AI and also the availability of NVIDIA GPUs. Remember, Microsoft and Amazon are getting the same NVIDIA GPU allocation, but Microsoft is probably using more of that GPU in-house for OpenAI training, whereas Google, because they have their own TPU chip, they can add more of the NVIDIA GPUs for cloud revenue. And that's, I think, what's driving that acceleration in cloud growth.
Can we just round this out with Meta and what you're expecting today from them?
I mean, ads continue to be very strong. And that's what we heard from Reddit last night, Snap. So ad print was very solid. The only caveat with Meta is they are more exposed to the Chinese advertisers, Temu and Shein. And they seem to be paring back this quarter. So that may have a bearing on the extent of the beat, but I still expect a beat when it comes to Meta.
Mandeep, thank you as always. This was wonderful. That is Bloomberg Intelligence Senior Tech Analyst Mandeep Singh. Also coming this morning, Eli Lilly. Investors will be closely watching for updates on its blockbuster obesity shot, Zepbound. Let's get back to Sam Fazeli, our Bloomberg Senior Pharmaceuticals Analyst. Sam, any chance of another upgrade? What are we going to get from Eli Lilly today?
Well, so today's story is, I think, gonna be. The question is, will it be another upgrade after 2 quarters in a row of upgrades? Our current feeling is that that's unlikely, but this is Zepbound, this is obesity. Anything is possible. They have recently launched vials as opposed to pens for the product in the US, so maybe the uptake of that has been a lot faster than expectations. So let's see, but. I've had to write some of these numbers down because this is an amazing story so far this year. So in January, they told us a 32% operating margin for the year, midpoint. In Q1, they raised that to 34. In Q2, they raised that to 38. You want to talk about operating leverage, as you were talking about earlier with Alphabet? Here's operating leverage for you, right? And of course, that's why people are so excited about Eli Lilly, and the obesity space is driving significant growth.
I mean, their product is Zepbound, as you say. Just put the context for 2025. What kind of growth in the GLP-1s are we expecting in 2025? Because this still seems as if we're in the infancy of growth rather than anywhere near mid-cycle maturity.
Oh, yeah. So 2025, I think we will see another similar several $1 billion of revenue growth for Zepbound and Mounjaro. Of course, it's only called Zepbound in the US, from what I understand. The interesting thing here, Manas, is that if you look at consensus estimates, you look at the PE multiple of the company, you look at consensus estimates. If consensus is right, this is a stock that's supposed to go from EPS of just over 6.3 in 2023 to $55 in 2030. Now, I don't know how many other companies there are out there where analysts are expecting that sort of growth on the bottom line. And a lot of that obviously is revenue growth with continued margin expansion, maybe possibly getting to 50%. And 2025 is quite important for that because there are drugs that are reporting in 2025 which are some of the key elements of helping drive that growth and keeping Eli Lilly competitive amongst this plethora of other companies that are trying to eat into that market.
Sam, you're one of the best. Thanks for joining us. Sam Fuseli there. Thank you so much. Okay, coming up, we're going to set you up for your trading day and what to watch next. And we'd also love to hear from you. And what do you think about our shows on Bloomberg? We appreciate your feedback. Maybe if you've seen something here you don't like, use Manas's name, not mine, but just scan the QR code on your screens to participate in the survey. Give us all the feedback. I hear there might even be a little gift card you might be able to win. So go ahead and do that. We're up next with what to watch out for your day. It's your Bloomberg Brief. I'm Danny Berger alongside Manis Cranny in New York. Let's get you set up for your trading day on this Wednesday. Another big earnings day. Caterpillar and Eli Lilly will both be reporting before the bell. Plus, we'll have some more economic data, ADP numbers. Those are out at 8:15 a.m. Eastern. U.S. GDP and core PCE, that comes out at 8:30. Then it is Microsoft, Meta, Starbucks results. All those come, Manis, after the market close.
Okay, some movers, Danny. Chipotle, we haven't touched on this yet. Sinks after the sales fall short. Investors essentially disappointed with the outlook from that. Look at this Reddit, just storming ahead, up 24% now. This is a new high. Extended trade, strong holiday quarter for them, and strong forecast. MicroStrategy comes back 2.38%, just ahead of their earnings after the market closed today. Shares are up more than 300% so far this year. But it is all about tech today. We're going into Microsoft and we're going into Meta.
Yeah, I think we just need to put Alphabet up on the screen, too, of those big post-earnings move. This is the thing that stood out, Manis, 5.6%. Sundar Pichai saying a quarter of Google's new code is being written by AI. There's been this big fear-mongering about what kind of jobs AI takes. It's clear that coding is ripe for it, and it is the very same companies that are plowing money into building AI capacity.
And it's about closing the gap with Microsoft and Meta. The cloud business up 35%. There was one small issue at the bottom. Shein and Temu, two of the largest advertisers that actually cut their spending on advertising. It's just a small, but you're always looking for kites to fly.
Meta, as Mandeep was saying, Meta is more exposed to China in that way, so it is an issue for them. Again, it's this Chinese economy rearing its head yet again. Okay, that is it for the brief. Surveillance. We'll take it from here on Bloomberg.